It's an ego test, challenging people to question their basics. Bitcoin forces you to challenge what is money in the first place. Larry Fink is a great example, who was completely against it until the moment where he actually questioned it. Bitcoin has clearly become a completely different instrument in 2024 than what it was in 2023, especially when you look at it from a risk-return perspective. I think that we are really entering a new era for Bitcoin where prices will be face melting because the interest will come from all sides while the supply obviously is strictly capped. If you had bought the house with Bitcoin, that would have cost you 664 Bitcoin, while today buying the average house is costing you about 6 Bitcoin. So your purchasing power was multiplied by a factor of 100 if you had held Bitcoin rather than fiat currencies. Put together all the processing power of Apple, Amazon, Facebook, Microsoft together and use them exclusively to attack the Bitcoin network, they would still not even make 1% of the processing power on the Bitcoin network. If China, with all of its efforts and its almost endless resources, is completely unable to even threaten Bitcoin network, I don't think that any other country in the world would manage to do anything to it. The only thing you can do is ban yourself from profiting from Bitcoin. So it is not something that can be corrupted. It is not something that can be used for political ends. It is a genuinely neutral commodity. Coming from the traditional financial industry, you are, trained to think in a certain way, and being, let's say, a square peg into a round hole is does not fit usually. But for those who are open-minded enough, they look into Bitcoin very seriously, like I did, and then they decide to make completely the switch, like I did a few years
Absolutely.
ago.
Interesting. Yeah, then let's get started directly with that. I would say it's interesting for me when we look at the topic of like traditional finance and coming into Bitcoin. Like, why do you think there are so less people, so not a lot of people that actually come from a traditional financial space and then like, let's see that Bitcoin thing. It seems like they learn too much of fiat and then have a hard time to actually switch over to the Bitcoin. How was that for you?
Yeah, actually, it starts with what you study in typical economics or finance universities or studies, where you never are presented to the idea that money is something. It's an agreement between people. You have countless classes on what do I know, accounting, macroeconomics, and so on, but they never investigate the very basics. What is money? And since you have never done that for your entire studies and then in your career in banking or other financial services, questioning these basics is often challenging. And Bitcoin requires let's say, it's an ego test, challenging people to question their basics. What if the entire baseline layer on which we are working, on which we are basing all of our assumptions, is just the wrong one? And Bitcoin kind of forces you to challenge what is money in the first place. And then once you are open enough to challenge that, then you come into the rabbit hole, and then you can be converted to Bitcoin. And unfortunately, I think a lot of people in the traditional financial system do not make that switch, are not open-minded enough to challenge their assumptions, and therefore they end up dismissing Bitcoin like most financial advisors do. Just Larry Fink is a great example, who was completely against it until the moment where he actually questioned it, and then now he's one of the big advocate behind Bitcoin.
What do you think made switched his mind? Like a guy like Larry Fink doesn't need Bitcoin. I think like everyone knows that he's financially well off, and he absolutely could ignore like a Warren Buffett, like Bill Gates, like so many other people say like, Bitcoin is rat poison. I don't need that. He could be that guy. Like, why did he saw Bitcoin? Do you know that?
Well, the optimistic view is to say that he probably was humble enough to challenge the base assumption on which he has built his empire at BlackRock. Now, the not so optimistic view is that he just thought, okay, there is money to be made. and then he just tried to find the way to make money, and then while doing that, he understood that actually there's really something behind it. The truth is probably somewhere in between the two. But yeah, I mean, for all the other big financial titans to be able to embrace Bitcoin, you need them to have a little bit more humility and admit that they do not know it all, which unfortunately is a challenge for a lot of people, and I want to say especially in the finance world.
Yeah, it's the ego death. It's not easy for traditional finance guys. At least in my experience, it's kind of hard to do. It's interesting. Let's look a little bit at the year before we get started with other topics. This year has been a special one. I feel like, I mean, for me personally, because I started the podcast and stuff like that, but in general for Bitcoin, there has been so much happening, from like the Bitcoin ETF, from the halving, from Trump being a supporter all of a sudden for Bitcoin, from all of a sudden there is a bill that calls in America Bitcoin as a strategic reserve that has now a fair chance of actually passing. So like, what do you make out of all that year? Like what's your kind of takeaway of all that things that already happened, and what do you kind of expect from that?
Bitcoin has clearly become a completely different instrument in 2024 than what it was in 2023, especially when you look at it from a risk return perspective. Before 2024, you didn't have the Larry Fink supporting it. You didn't have, Trump even remotely on the radar of being elected. You didn't have the ETF in place. And other items you mentioned. Therefore, there was still quite some risk. Now, the risk that it's completely dismissed by big, let's say, financial institutions, by politicians, is very low, because you have all these institutions that have embraced it, that stand behind it. You have literally the full Trump administration that is behind it. I mean, from Musk to Kennedy to Vivek Ramaswamy, they are all people who genuinely understand what Bitcoin is. And them speaking at the Bitcoin conference in 24 and in 23 already proves that they have interest for it. And then if you actually listen to the speech they made, they genuinely understand what Bitcoin is, what kind of benefit it can bring to the world. So if I look at Bitcoin over its history, you really had different phases. It started with something that is really for nerds, something extremely weak and not well decentralized at first, but fortunately it evolved into something stronger and stronger. It improved, but it was still an extremely risky thing. Until at least the block size wars in, 2017, 2018, because until that point, it wasn't clear even to Bitcoiners what Bitcoin really was. Is it a currency? Is it a store of value? Is it something different? And I think that there is this first breakup point in with the block size war, when after that period, Bitcoin became something much more understood, something much more accepted, and the risk that Bitcoin would die dropped to an extremely low level. From that point onwards, it needed to have institutional acceptance, political acceptance, and to have some kind of regulatory framework around it to decrease legal risk and regulatory risk. And these elements are clearly what happened in 2024. So we were, over the last 6 years or so, in this transitory period. And I think now with, let's say, 2025 starting with the new US presidency, I think that we are really entering a new era for Bitcoin, where prices will be face melting, as they like to say in the industry, because the interest will come from all sides, while the supply obviously is strictly capped. So there isn't enough chairs to sit on, but a lot of people who will want to sit on that asset.
What is face melting prices? Like what does qualify face melting?
Well, I'm trying to hold myself from making any concrete predictions because the only thing you know with a prediction is that it can only be wrong. And in the case of Bitcoin in particular, I noticed that with trying to value Bitcoin for the future, if you at least manage to be in the right order of magnitude, then you're already extremely accurate. So saying that next year Bitcoin would be, let's say, below 100K or between 100K and a million or above a million, if you manage to be in one of those three range, I mean, in the one that is right, that's already extremely accurate predictions. And I think it would be rather the latter of the two. So the latter two of the three that I mentioned. Now, whether we will end the year 2025 with, what do I know, 200K or 600K or already go beyond the million, it's impossible to say. So timing is difficult, plenty of things can happen, but one thing is just next to certain is that the way forward is up, up, up.
Absolutely. Yeah, that's you only have to be directional correct as long as you don't do any crazy leverage things, which I never recommend doing, and always say like stick to the basics of hodling. But yeah, it's exciting times ahead. That's really cool. And I also think face melting, I think in the next year it will be face melting for outside of Bitcoiners, like normies who are not that into Bitcoin. But then the coming years probably will be even face melting for Bitcoiners, and they will be surprised on how far Bitcoin actually can go. Not only from a price, like actually like from who does adopt it and what's happening as in events. Like I think we have no clue what's really going on the next years. When you just look at like the first 11 months, what happened in 2024, it's quite fascinating how far we have come in just like this 11 months. Makes you wonder what can happen of that. And I think you mentioned it already, or maybe not. You're also the CFO of Relay. So there's one thing. This podcast will come out in 2 weeks' time. So this will come out in like end of November. So we are close now when these people actually see to the date when Microsoft is actually deciding on like buying Bitcoin or not. What do you think as you are the CFO of a company, completely different scale company than Microsoft, but still you probably have way more insight of like how that decision making actually occurs and how likely it might be. Obviously, nobody knows because it's a shareholder vote. But how do you look at Microsoft and then maybe potentially other companies spying that?
I obviously hope that they will vote in favor of Bitcoin, but my prediction would be that they won't. I mean, this is a company for boomers. This is a company that, it was great 20 years ago, and it is, let's say, it is not on the top of technology right now. And I think that I do not know their cap table, let me be honest. However, my assumption is that it will be mostly a company that was bought by people who were from the previous generation, not ours, and who are probably not that attuned on average to Bitcoin and to the potential of Bitcoin to change the world. Therefore, I assume most of them will just think, oh, it's a joke, it's not serious, just because they are, 10 years late on the reality of what's happening. So Microsoft is probably not, they are not the ones who will lead the way. Those who will lead the way, in my opinion, are much smaller companies. Of course, you will have some that are fairly big, the MicroStrategy and some that are adding Bitcoin to their balance sheet. However, I think that SMEs are the one who will start the phase, and I think it's a great way to see. So it's a great thing to see, because the smaller guys who are open-minded enough to understand how the new financial system will look like, they are the ones who will benefit from the next wave of price increase and the future benefit that Bitcoin will bring.
Absolutely. Yeah, my only hope is that BlackRock has some influence, because I think they have like 7 or 8% of the company, something like that. So that's my only hope, that Microsoft maybe gets sold on Bitcoin by those guys, and they're like, hey, buy Bitcoin, and by the way, you can use our BlackRock ETF as an instrument for that. So maybe there's some motivated BlackRock salespeople there making some interference. But as you said, the shareholder base who hold the voting rights probably are not skewed towards those people who would vote for Bitcoin. But yeah, maybe let's see. It will be fun to watch, I guess.
Absolutely.
Absolutely perfect. Then let's go a little bit back to the strategic reserve. As we are both in Europe, I think you're also residing in Europe, right?
Yes, I'm actually in Vienna here in Austria.
Oh, you're in Vienna also. Wow, really cool. We're in the same city even. Perfect, and didn't knew that. And it's interesting for me when we're in Europe and there's all the big news is always coming from America. It seems like the strategic reserve. I mean, obviously the ETF we have since 2015 and ETP. So like that we have that way earlier than that. How do you look at nation state game theory? How do you look at the difference of like where America already is and might be in the future, even further ahead, and Europe is still kind of I don't want to say hostile, but skeptical from a regulation standpoint towards it. I didn't hear any European country saying, hey, we might adopt it as a strategic reserve asset. So like, how do you look at that game theory in Europe?
To get there, I would like to first have a look a little bit at what's happening in the US. There is, for example, this foundation, the Satoshi Action Fund, who is promoting, the info, so sharing knowledge about Bitcoin, especially with states, and then ultimately, hopefully at federal level. And as people from that foundation are often saying, it starts with state adoption before it's getting to federal level. This is also what Cynthia Lummis was pushing. I think she's senator for Wyoming, if I'm not mistaken. So she started, at a more local level and now pushing that idea towards higher level at the federal scale. Now, in Europe, I believe something similar might happen, that you will have more and more adoption among people, among SMEs, among institutions, and ultimately you will have Bitcoiners that will infiltrate governments or political parties, and that will share the merit of Bitcoin, why it would be the best thing to do at any level of government. And this is already what we are seeing at some places. In Germany, there are some people that are, now talking about Bitcoin at the level of the Bundesrat, and that are promoting usage of Bitcoin. Now, clearly, we are very far away from having any government in Europe having a pro-Bitcoin stance, but I think it will come eventually. It will just take many more years than in the US. Now, will that be 2 years or 5 years or 10 years? Impossible to say, but I think that unfortunately, Europe will stay on the sideline and miss a big part of this wave. The same way Europe is not leading in innovation. Europe is leading in regulation, which is still unclear to me what is bringing to the people to have such an anti-innovation stance at the end of the day. But I think that that the Bitcoin innovation will be the same. They will not be leading. They will try to be quick followers, and they will end up being late followers. They will get there eventually, just not as part of the leaders.
The masters in regulations. There's this popular saying of like America innovates, China copies, and Europe regulates.
Exactly.
It's So super interesting to see. I mean, I have a lot of hope always. Always a really optimistic person, but I just don't see anything from a political level. I mean, there's the German one, but it's an initiative of one parliament member of Joanna Cotard. She will also be soon be on my podcast. That's great that things are moving, and I know also in Austria the parties are aware of it. They are meeting with, for example, people in the Bitcoin space. So there are things happening, but I feel like they should be further ahead already. Like they should already have been happening like 3-4 years ago, and now we are already further. But maybe that's just like wishful thinking of a Bitcoiner here. You also, which is super interesting for me, that you come from this traditional space of finance, and you have this FRM that you have next to your name, this financial risk management, as you said it. And I just talked a few hours ago with someone about the risks of Bitcoin, which is a super interesting topic, because there's like the crowd is like, Bitcoin has no risk. Bitcoin is like risk free. And then you have the traditional folks who see like, like Bitcoin is the most risk on asset ever. BlackRock even said like Bitcoin is a risk off asset, which was quite surprising. How do you actually assess and describe the risks of holding Bitcoin and the risks of Bitcoin itself?
Okay, like for most things in life, the reality is it's a bit complex in the sense that risk must be differentiated. There are multiple types of risk. And unfortunately, the traditional financial industry has adopted a definition for risk that I think is very misleading. So in traditional finance, when you talk about a risky asset, what they mean is a volatile asset. So risk is the standard deviation of the expected return. So basically how volatile it is. And with that definition, Bitcoin is clearly a highly volatile and therefore what they call a risky asset. Now, therefore, by definition, so taking zero risk with that definition would be to hold dollars. But look at the value of the dollars 30 years ago. $1 was still $1. However, it could buy you more than twice what you can buy today with a dollar. So while there is no volatility, I mean, the only certainty is that you are losing purchasing power every day by holding these traditional fiat currencies. Now, holding stocks, brings you a bit more volatility, but at least you are kind of maintaining your purchasing power over time. Now, with Bitcoin, you have even more volatility, but your purchasing power clearly increases over time. It was Anthony Pompliano, I think, last week, who was, for example, making a comparison of how much it cost to buy a house, in 2016 compared to today in dollars or in euros. So in 2016, if you were to buy a house, it would have cost you on average $280,000, while today it costs you on average $400,000. So it increased by roughly 50%. Now, at the time, if you had bought the house with Bitcoin, that would have cost you 664 Bitcoin, while today buying the average house is costing you about 6 Bitcoin. So your purchasing power was multiplied by a factor of 100 if you had held Bitcoin rather than fiat currencies, or a house in that example. So the risk that people are mentioning based on volatility is, I think, a very misleading metric. So what you need to consider is what is appropriate for you in terms of your investment horizon, what is appropriate in terms of your ability to bear volatility over a short period of time. If you really don't have any money, let's say very little money, and you will need to have a big expense in, 3 months, do you put everything you own into Bitcoin? Well, that's probably not what I would recommend, because nobody knows whether in 3 months it will be 50% higher or 20% lower. It can very much be that if you will need to sell your Bitcoin in 3 months, you will be at a loss. However, I'm considering, I'm saving Bitcoin so that my son can buy a house when he is my age. Well, over that horizon, will it be 20% lower? No, the value will be very largely superior. This is just next to certain when you understand the basics behind Bitcoin and the incentives behind it. And in my eyes, therefore, saving into Bitcoin is precisely, removing the risk. I want to maintain the value of my wealth over a long period of time. This is precisely removing the risk. Now, to people from the traditional financial industry that are looking at risk, you do not look at risk alone. You don't just look at volatility. Typically, you combine it with a return. And, you need to make sure that the expected return of what you invest in is worth more than the incremental risk that you are taking on. And fortunately, there are multiple metrics in order to make this comparison. The most famous one is probably the Sharpe ratio, so named after William Sharpe, a Nobel Prize of, 60 years ago or something, where the Sharpe ratio basically establishes how much additional return you gain by making an investment compared to the additional risk you're taking. So you have a benchmark, let's say US Treasury, which is typically used as benchmark. The additional return of investing in a stock may be, let's say, an additional 5%. If the additional volatility is an additional, 2%. You take the ratio of the two, and therefore you can compare securities or compare investments that have different risk profiles. It's not just saying one has a higher return or one has a lower risk. It's saying compared to its risk, this investment is more worth it, or it's more, the risk-adjusted return is bigger than that of this alternative investment. Now, if you look at Bitcoin from that perspective, and almost regardless of which time horizon you take, if it's more than, let's say, 5 years, so whether you take 5 years or 8 years or 10 years, the risk-adjusted return of Bitcoin is largely superior to the risk-adjusted return of basically any security or index, clearly largely superior to gold, the S&P 500, even the Nasdaq, or any other commodity you can imagine.
I partnered up with Coin Vigilante. This is the most beautiful Bitcoin timepiece that I ever saw created by anyone. Look at that beauty. I love it so much. Coin Vigilante made a perfect Bitcoin watch. That's the perfect, subtle, elegant way to go out there and show that you are a Bitcoiner. And that watch brand is Bitcoin only. And Coin Vigilante just dropped a completely new and amazing Genesis edition of their watch collections. You have the date of the first ever mined Bitcoin block in there, and of course also the block height and which epoch we are currently in. I love the level of detail they put in this masterpiece, and make sure to check out those amazing Coin Vigilante timepieces down in the descriptions. I love those watches so much. If you watch or listen to my podcast on a regular basis, I guess you already bought some Bitcoin. And now the most important step is to keep the Bitcoin. Keep them secure in a hardware wallet. My personal recommendation for hardware wallet is the Bitbox. It's super secure. It's simple to set up. It's also a perfect gift for a friend who has still their Bitcoin on an exchange. And you can get a 5% discount with the code Robin at the checkout. Visit bitbox.swiss/Robin to get your Bitbox. And the next step is to really level up your sovereignty as an individual. You have to have the most secure self-custody setup. You have to secure your own devices. You have to protect your privacy. You have to set up an inheritance plan. And depending on where you live, you even want to have a plan B, a citizenship where you can move in case something goes really wrong. And through all those steps, the Bitcoin Way is guiding you through step by step. And if you visit thebitcoinway.com/partners/Robin, you even get a 30-minute free call to find out how you can level up your sovereignty. That makes a lot of sense when you look at like the volatility and then the risk associated that with the investments. And now there is also a different kind of a risk of like, what is the risk of Bitcoin being hurt, like fundamental, like the asset and the network? Is is there something because as when we are in the Bitcoin bubble, podcasting and Twitter and stuff like that, we often forget that people that are coming new to the Bitcoin space, and I see that now a little bit more and more where people actually ask me, okay, hey, how's the Bitcoin thing going? Like it got a little bit more in the last like 3 weeks, I would say. People actually have those questions like, oh, can Bitcoin be banned, or like what happens if there's like a bug or something like that? How do you look at that risk from your perspective? Is that something that is like, okay, that it's such a low probability and it's so far out the curve, it's kind of hard to look at that, or how do you assess that?
So I wrote a book on Bitcoin that was published last summer, and I have actually 2 chapters dedicated to risk management around Bitcoin. So one on financial risk, covering some of the topics I've discussed, and one fully focusing on non-financial risks. And those are precisely the one you mentioned. So there are multiple types of non-financial risks that, let's say, people talk a lot about, but that actually, when you look into them, are completely irrelevant. The common ones are, for example, what is the risk that a 51% attack? So basically, that one big entity with enormous mining power, so let's say computer processor, so many computer processing power, could take over the network and mine blocks faster than the rest of the network. So that's one of the topics you hear a lot, and people completely underestimate the level of security of the Bitcoin network. In order for any entity to take over 50% plus of the network, you would need to have such a mind-blowing quantity of energy that that entity would basically control the world by far, if that was possible. And to put things in perspective, if you could put together all the processing power of Apple, Amazon, Facebook, Microsoft together, and use them exclusively to attack the Bitcoin network, well, they would still not even make 1% of the processing power on the Bitcoin network. So even all of these big institutions would come nowhere near the ability of threatening the Bitcoin security. In addition to the fact that it's actually definitely not in their incentive to spend billions of dollars to just temporarily be able to mine blocks a bit faster than the rest of the network, which at the end of the day will not bring them anything. Or maybe they would mine a few blocks, but that's peanut compared to the value of the network. So not only is it technically impossible, but on top you have game theoretical incentives that make it irrelevant to even try. So that's one of the non-financial risks that people are mentioning. Now, another big one that people are often mentioning is, what is the risk that Bitcoin is banned? And in order to address that one, I would like to take one historical example: China. China, that is known to, when they make decisions, they are rather strong in it, and they make it happen, with full force, not really caring about things such as, human rights or other, let's say, side effects of their big decisions. And when China decided to ban Bitcoin the first time, of course, nothing happened to the Bitcoin network. Then decided to ban it again. I think it was 2017. Nothing happened. Then they banned it again in 2021. This time much more strictly, by banning mining, banning any company to work on any crypto asset in China. And there you saw a very temporary drop in the hash rate, because many Chinese miners actually stopped their operation in China, moved elsewhere, and continued mining from elsewhere. And just 3 or 4 months after the big ban of China, you had the Bitcoin hash rate so the security of the network, that was back to an all-time high. Now, China has proved one thing with this historical example, is that even when you have one of the most powerful countries in the world enforcing a very strict rule to ban something, well, they are not able to make any difference for Bitcoin. And if China, with all of its efforts and its almost endless resources, is completely unable to even threaten Bitcoin network, I don't think that any other country in the world willing to ban Bitcoin would manage to do anything to it. The only thing you can do is ban yourself from profiting from Bitcoin. You can ban your own citizen from profiting from the future of Bitcoin. The same way you can ban your citizen from using the internet, like North Korea has done. Well, does it make them better? Well, it's just you're removing one technology, one life-changing technology from reaching people in your population and from using it as member of this global scene. So that's again just another non-financial risk that is often talked about, and it's a fair concern to have. But upon investigating it, it's completely irrelevant and has no reason to take the place in any debate on the topic.
I think, and that's a great point of like, people often confuse the risk of Bitcoin with the risk of a stock or with the risk of a company or with risk with something else. Like the one thing is a protocol like the TCP/IP protocol, and the other things are like centralized companies. That's for Bitcoin has protocol risks, but not the company risks. And I think it speaks to Bitcoin in a great way when the risks involved with Bitcoin that are mentioned are the world has to come together in a world government and then ban Bitcoin, then they might have a chance against it. If we come to such extremes measurements when we count the risks of Bitcoin, that fact alone tells you how resilient Bitcoin is. Because there are so many, like if you just like take a company like Tesla, there are so many risks involved with that. You just look at what they have to post as investor relationships, what the risks are in that, and there's like hundreds of risks. I mean, Michael Saylor made an amazing video actually on that, listing different risks for companies, different risks for real estate, and that just like opens your eyes to what can go wrong, what small things can go wrong in a company. So like even small things like if like Elon Musk like just has a heart attack tomorrow, that is a big risk to Tesla, even though I think Tesla grew out of that they're so dependent on Elon Musk, but still it's a big risk. There's not one person that has a heart attack tomorrow that has a significant impact on Bitcoin, even on the Bitcoin price. I think like I could not think of one person that would, like, even if like Michael Saylor or Adam Back or like Saifedean Ammous, that has no impact on Bitcoin, I think, in that regard. So that is something I think, especially for people that are new in the space, to think about.
Absolutely. Ultimately, the point you're making is the difference between a security and a commodity. A security is an instrument where you have an entity behind it, a person or an institution or a group of people that have undue influence on the protocol, that have influence to change what what the value of that asset is. Compared to a commodity, it is just there. You don't have any person or group that can influence it. The same way, gold. I mean, you can have some people with a lot of gold, but no matter what one person or institution or company thinks about it, they are not going to change the characteristics of gold, or they are not going to change fundamentally what it is. And Bitcoin, in that respect, is very similar to gold, in the sense that it is a commodity. It is independent from the influence of any centralized institution or person. And that also makes Bitcoin very different from any other crypto asset, which they are all to some level centralized, to some level dependent on the group of people. People saying, hey, let's change from proof of work to proof of stake, and and making that happen, or canceling transaction, or these kind of things cannot happen for Bitcoin, which makes it a truly unique, robust, independent commodity.
Yeah, that's a unique point that a lot of people actually, we have to do a good job educating more people. That's kind of we have a strong mandate to educate people. That's the thing. When we think about what Bitcoin is, it's also interesting for me, and different people look at it differently. How do you look at what Bitcoin is for you? Is it like people come to the conclusion, oh, like it's an asset? People come to the conclusion, oh, it's a way of life, it's an exit strategy. Whatever is like, what is the main point for you of Bitcoin? What aspect of Bitcoin speaks the loudest to you?
Well, obviously, there are some, let's say, side effects of Bitcoin that are very attractive, like the fact that if you invest in Bitcoin, well, you are increasing your wealth drastically, which obviously is something you will not easily say no to. But what really speaks to me about Bitcoin is not that. It's the fact that it's the genuine independent asset, genuinely neutral. So it is not something that can be corrupted. It is not something that can be used for political ends. So it is not, it is not racist. It is not for men or for women. It is not for Americans or for European or for Africans. It is a genuinely neutral commodity, which I believe is precisely the kind of thing that we need to bring us together and reset the base of the entire financial system. A base layer that is genuinely neutral, that does not discriminate, neither based on skin color, nor nationality, nor gender, nor political affiliation, nor any other criteria. Something neutral for everybody to use according to the same rules, no matter what anybody thinks about it. And I think that with this base, then society can build something that makes sense. And unfortunately, what we have seen with the politicization of financial instruments and of the monetary networks, that has probably destroyed society and divided society. I'm taking using the dollars as a way to export inflation, for example. So let me explain that. The US dollar is used as global reserve currency. So there are many other countries that are using US dollar as their currency or as base to give value to their currency. Therefore, when the Federal Reserve is printing more dollars, they are creating some inflation locally, but they are also creating inflation outside of their country. But obviously, the dollars that they are printing, they are using them, for the US interest, not for, the African countries using the US dollar, or for the South American countries doing the same. So it is a way for the US to export their inflation. In other words, it is a way to politicize, monetary network, to use it to their advantage, basically exploiting countries that are already in need, countries that are already poor, taking even more wealth from them and accumulating it in the hands of the already wealthy nations. Now, Bitcoin is completely changing this game and setting a new base for every nation to be able to prosper from a clean slate, from without having this big country or institution taking advantage of them. And I think that creating this strong base for the world to build upon is the way how to build a strong society for the future. So that's how I see Bitcoin and the most transformational aspect of Bitcoin.
That's beautiful. I think that's what we hope for, that Bitcoin is also doing for the world. I loved it a lot. For the last part of the podcast, I want to focus, as you are, as you said, CFO of Relay, what impact Bitcoin has on businesses, especially when you all of a sudden have a really good asset, which is your new hurdle rate with like, okay, what happens to the startups? What happens to venture capital? What happens to the financial space overall once you kind of accept that there is a new way of saving money, and that saving money is now not losing value, but that saving money is actually gaining you purchasing power. How do you look at the impact that Bitcoin will have on businesses, on startups, venture capital, and all the things in finance?
All right, let me start with the SMEs that understand the potential of Bitcoin. Let's say, for example, real estate companies. There are actually quite some real estate companies that are buying Bitcoin for their balance sheet, several of which are going through Relay to do that. And that's how we get some insights into their business model and why they are doing that. Look, when you are building a house and you know that in 20 years, in 30 years, you will need to renovate the roof and, do some adjustments to the walls and maybe change the windows, well, you know that you have a future expense. So you need to insure yourself against that future expense. So basically immunize your portfolio, so this future liability, with an asset that will match that future liability. And what these real estate companies are doing is that for every house they build, they buy some Bitcoin in order to insure themselves against the future liability. And I think this is a great way to think about it, because this is the asset that will maintain its value best, or actually, since we are so early in the space, that will most likely increase in value massively over a long period of time of 20 plus years, and therefore will strengthen the long-term prospect of this company. Now, not only these companies with future liabilities have a strong interest in buying Bitcoin, you also have let's say much more regular and traditional SMEs that are adding Bitcoin to their treasury through Relay. I'm thinking of people such as bricklayers or dentists, sorry, and many other, let's say, more traditional, non-financial related companies that just realize that this is clearly the best way of building a strong treasury. Does that answer your question?
Yeah, that's super interesting when we look at that. And one thing that I'm also curious about that is when we have now Bitcoin as the new reserve currency in having financial decision makings. Like there's always this wondering. I even had a conversation a few weeks ago where someone was like, okay, I have a good paying job, but I don't like it that much. But I really like that I can stack a good amount of sats there. And he was pondering after like, okay, what if I now go out of that job, start my own venture, and probably have the next year, maybe a few years, no or next to no income. Maybe I even have to get to my savings, and this opportunity cost of what Bitcoin creates, because it's such an strong asset that you really want to hold on to it. It could create like a world of savers, which accumulate a lot of capital and then make hopefully better decisions with their capital allocation once they get to businesses, once they go towards that. That's kind of like where I think we're going. And the question that is for me underneath that all is like, how do you decide how different is it to deciding of like, what do you invest in a Bitcoin world versus in a fiat world, where in a fiat world, your base savings technology is like losing value all the time. And in a Bitcoin world, your base layer of in saving is actually a purchase power. But that's kind of like where I'm standing, and I'm still like kind of not sure how this is going. What's the impact of sound money on a global scale is for investments?
One thing that definitely changes in that respect with Bitcoin being part of the landscape at least, is the benchmark that companies are having. If you're a big venture company, you know that, well, you can do two things. Either you can invest in companies, or you can put your money in Bitcoin, with an expected rate of return of roughly 50% per year on average over a period of time of more than 4 years. The first option, so investing in companies, you need to understand that you need to be at least better than Bitcoin to even be worth considering. And actually, since the company has a lot more risk, you need to be a lot better than the expected return of Bitcoin to be able to compete with the simple investment of just putting your money in Bitcoin. So from a venture capital perspective, it completely changes the base hurdle rate, because now you have, either you have this company bringing you a lot more than what Bitcoin would bring you on average, to compensate for the additional risk, or you just put your funds into Bitcoin. So it definitely increases the bar, and it will force companies to think about new ways of reaching these kind of rates of return, which honestly, given how the economy is going, is just next to impossible to achieve if you are outside of deep tech or Bitcoin itself. You can be in AI and reach that kind of returns like Nvidia, or you can be in Bitcoin, which again largely offers a largely superior return to Nvidia, as we have seen when you compare MicroStrategy to Nvidia over the last few years, where MicroStrategy has outperformed even Nvidia and of course all other companies of the S&P 500. So this changes. So Bitcoin basically changes the benchmark for investment.
Absolutely, yeah, that's very right. Really cool. Thank you so much for that. There's always one question that I ask all of my guests towards is, what can we learn from you besides Bitcoin?
That's a good question. I've been focused on Bitcoin now for a few years, so all of my thoughts are around it. One thing that I'm also passionate about is triathlon. So especially long distance triathlon, and I've been, for example, I've been competing in the full Ironman European Championship a few years ago, and I'm very proud of having finished it in time. That was in Frankfurt 2017. So yeah, if you want to hear more about triathlon and long distance endurance training, that's also something I'm very keen on talking about.
I love that a lot. Yeah. I know one of the three things, I'm a swimmer and I run actually a lot also. But I really don't like biking. I couldn't do it.
All right. Well, I'm coming from running, and I had to learn how to swim properly and how to bike. Yeah, it just comes very quickly. And then when you combine that, you actually learn to like the switch between the three, because then you work literally every muscle in the body, and the triathlon as a discipline in itself is a really enjoyable one.
Absolutely. Yeah, really cool. Perfect. Then let's come to the end routine of the podcast, where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And your question is, if you were skeptical in the beginning, your Bitcoin story, what did change your mind?
I definitely was skeptical, and I would like to bring a quick story on that. I remember in 2015, if I'm not mistaken, I was standing in front of the full board of risk management board of ING in Germany, where I was working at the time, so the third largest bank of Germany. And I was the local expert on blockchain technology. And I was telling them, look, at 400 and something dollars per Bitcoin is grossly overpriced. Well, how much I hope that I had bought at the time, but yeah, I didn't, because I was conscious of the very high likelihood of failure of Bitcoin. And maybe I was right at the time, because the risk was just so high that maybe it wasn't even justifying such a price at the time. Now, what did change my mind when I was a skeptic was looking at Bitcoin on a adjusted return perspective. So what I mentioned earlier, looking at Sharpe ratios, looking at other metrics that express similar things, so excess return compared to risk, like the Sortino ratio. And when I understood, actually, it's, yes, it's more volatile, but it offers you so much more return that the volatility is actually irrelevant. That really changed my mind on Bitcoin, and that's how I started my journey.
Really cool. Because we mentioned it now 2 times. What exactly is the Sharpe ratio? What data is coming into that?
So Sharpe ratio is excess return divided by excess risk, both compared to a benchmark. So it is how much more return you bring, so an asset would bring compared to how much more risk it is. Risk being defined as volatility. So again,
risk is volatility, yeah.
Exactly. So if, let's say, Bitcoin brings you 50% return a year with 10% volatility, well, it's a Sharpe ratio of 5. I mean, here I'm comparing to a benchmark of 0, but it would be a Sharpe ratio of 5 compared to, let's say, S&P 500 with an average return, I'm making up numbers, but let's say of 7 with a volatility of 3.5%, and therefore that would be a Sharpe ratio of 2. So when you compare the two, you are able to say this one is more interesting on a risk-adjusted basis. And that's where Bitcoin is second to none.
That's super interesting. Even though I really don't like calling volatility risk. It's a short-term risk if you need money, but that you can avoid that with just like having not everything in Bitcoin. then it's not a risk anymore if you don't plan for any things. But yeah, it's funny. Like it's also like when I talk with people and oh no, it's a risk, and I'm like, okay, what's the risk of Bitcoin? And always volatility comes up. Oh, the price swing. Like people really have like volatility, risk, volatility. It feels like.
Well, yeah, this is the official definition of risk in traditional finance. Risk is standard deviation of return. So volatility is literally how risk is defined in traditional finance, which, as I said, I think is completely misleading because Bitcoin is a risk-off asset. You want less risk? Well, invest in Bitcoin.
Absolutely, yeah, really cool. Yeah, thank you so much, Thomas, for being on the show. Before I let you go, where can people find you, reach out to you, and ask you a question?
I'm easily findable on LinkedIn and X, and always open for feedback, remarks, questions. So I'm looking forward to connect to as many of your listeners as possible.
Thank you so much, Thomas, for being on. Also, thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye.